Understanding Level Premium Insurance, an in-depth guide. Life insurance is a critical financial safeguard that provides peace of mind and financial security for policyholders and their beneficiaries. One of the prevalent options in life insurance is level premium insurance. In this article, we'll explore what level premium insurance is, how it works, its benefits, and its comparisons to other types of life insurance. What is level premium insurance? Level premium insurance is a type of life insurance where the premiums remain fixed throughout the life of the policy. This feature is prevalent in both permanent and term life insurance products. Let's break down the two categories. 1. Permanent insurance. The most common type is whole life insurance, where the premium remains constant and the death benefit typically increases over time due to the cash value accumulation of the policy. This makes level premium policies a popular choice for long-term financial planning and legacy creation. 2. Term insurance. In term life policies, the insurance coverage is provided for a specific number of years, commonly 10, 15, 20, or 30 years. Although the premium remains the same, the coverage amount does not grow, making it suitable for those needing coverage for a defined time frame, such as during a mortgage or while raising children. Key benefits of level premium insurance. Consistent premium payments. There are no surprises or fluctuations in premium amounts, allowing for easier budgeting as policyholders can plan for a fixed expense. Increased coverage with permanent policies. In whole life insurance, the death benefit increases as the policy matures, providing added financial security over the years. Guaranteed coverage period. For term policies, the guaranteed premiums ensure that the coverage remains intact for the duration specified, regardless of any health changes or market fluctuations. How level premium insurance works. Level premium insurance operates by setting a fixed premium during the policy's term. For term life, this means the premium remains static over the selected period. In permanent life insurance, premiums can last until the policyholder passes away, contributing to a cash value over time. Cost considerations. While level premium policies may come with a higher initial cost compared to annual renewing life insurance, they are often more economical over the long term. This cost-effectiveness arises due to the predictability of premium payments and the insurance company's strategy of overcharging policyholders in younger years, thus compensating for the increased risk as the insured ages. Factors affecting premiums. The cost of level premiums can be influenced by several factors. Age and health. Younger and healthier individuals typically pay lower premiums than older or less healthy applicants. Policy term length. In term life policies, longer terms usually result in higher monthly premiums compared to shorter ones. For instance, if a parent is purchasing a policy to cover college expenses for young children, they may opt for a 20-year term rather than a shorter 10-year term. Conversely, if the children are older and nearing adulthood, a shorter term may suffice. Level premium term insurance versus decreasing term life insurance. It's important to differentiate between level premium term insurance and decreasing term life insurance. Level premium term insurance provides a fixed death benefit for a specified period, ensuring coverage remains unchanged. This type is beneficial for those needing substantial coverage without diminishing benefits. Decreasing term insurance. The coverage diminishes over time, aligning with specific financial obligations such as an amortizing mortgage. As the debt decreases, so does the insurance coverage, making it cost-effective for settling debts but potentially less valuable for dedicated beneficiaries. Specialty forms of life insurance. Alongside standard level premium options, several specialized forms of life insurance cater to specific demographics, such as over 50s life insurance, designed for individuals aged 50 to 80, or joint life insurance, which covers two individuals, often in a partnership, on a first death basis. Example of level premium insurance in action. Let's illustrate with an example. Suppose Jen and Beth, both 30 years old and in good health, are looking for life insurance. Jen opts for a level premium term policy at $42 per month, locking in this rate for 30 years. Beth chooses a yearly renewable term policy at $20 per month, but her premium increases by 20% each subsequent year. After 5 years, Jen has paid $2,500 while Beth has only paid about $1,700, but as Beth ages, she will face escalating costs due to the annual increment in premiums. Ultimately, if either woman wishes to keep or renew their policies in the later years, Jen's fixed premium remains an advantage. Conclusion. Level premium insurance provides a structured and predictable way to approach life insurance. While it offers advantages in terms of financial planning and consistency, it's essential to assess individual needs and circumstances to determine the best type of policy. When selecting life insurance, consulting an insurance professional can help align your financial goals, coverage needs, and budgetary considerations, ensuring that you choose the right level of protection for your life stage. Whether opting for a level premium term policy or a whole life policy, this approach can significantly contribute to securing peace of mind for both policyholders and their loved ones.